So the next one is like quite different. So here what we have is like we are trying to find out the value of inventory as and when we are receiving the units or the components. Okay, so here we are trying to use FIFO method and weighted average method. So weighted average method is also called as or average value cost method. Okay, so we will use in both methods, and what the question wants is it wants us to find out the closing inventory, cost of sales, gross profit, and inventory valuation. Okay, so it asks quite a lot of questions, but the question is like very small. It's a very small question only, so we can quickly do this question. So we'll start. So we'll have the date, we'll have a remark whether it's like opening or purchase or sale. Units, we'll have how many units have been received or sold. Cost per unit, we'll have the multiplication of the unit, into cost, so that we'll have, and balance we have to update it. Okay, balance we have to update it. So this alone would be like for a lot of time. So we'll start. So we'll take all the days as August. Okay, we'll take it as August month itself, so we don't need to like put 4th August like that. We'll just put it as 4th. Remark is opening inventory, it's opening. So opening inventory we have 100 units and the unit per unit is 2.52. So we got it, and the same 2.52 is the balance. Okay, so we have on the 4th we have 252 worth of goods. On 4th, sorry, I think opening was 1. 4th we have a sale is 20 units. At what price we are going to sell? See, the sale will usually not have any value. Okay, because whatever is the existing value, that value we have to take. Okay, so we have to take 2.52. okay, we take 2.52. so 50.4 is like out of the store. Okay, so this number minus this number, so 201.6 is what is remaining in the store, right? So we'll go to the next one. So next one is on 8th we have a purchase. So purchase we have 140 units and we have 2.56 as the worth. So the total value comes to 358.4. Now this is where things get interested in FIFO. Already we have some units. Okay, already we have some units. The units is 20. Now we have 140 units put together. So now we have added it. So now the existing value plus the current amount that has been purchased put together forms the total balance of inventory. So on 10th we make a sale. So sale becomes interesting because how many units we are going to sell? We are selling 90 units. So that has to be split into 2. As it's a FIFO, it's a first in first out. First in was the opening. Okay, so still how much we have? After 100 we have 20 is been sold, so still 80 we have in hand. Okay, so we have to mark it as, so rather than putting like this, okay, we can show we can put it like this. Okay, we can take this and we'll put it here. So on 4th itself we had the balance inventory, right? We have the balance inventory. So the balance inventory is how much? 80 units at 2.52, whose value is 201.6. So both this value we have to take into account. So we'll add both the values. So this would look like much more neat. So we'll go to the 10th. So 10th is a sale. Let's do a sale. So sale, we have 90 units we have to sell. We have to sell 90 units. So we already have 80 units here. This has to be first sold, that's as it is a FIFO. So you can just copy it and we'll paste it. And still there is again 10 more units have to be sold, right? 10 more units have to be sold because 90 then only will happen. That 10 units will happen in 2.56. That 10 units will happen in 2.56. So the balance area, we'll just bold it so that we know that it's a balance there, it's balanced there. So how much do we have? Okay, do we have as the sale value? So sale value would be, so total sale value would be 2.52. Okay, I think we have these numbers. Okay, so I think put together we'll take the sale value. So this number plus this number. So 272 is the sale value. But we don't need to put the sale value. We just need to put the balance value. So what is the balance? See, the balance is this 80 has been sold. Okay, balance is only 130 units. So we can take here and we'll put it here. So the balance that we have in stock is 130 units. So this is the worth. We don't have to add anything else. We just have 332.8. So that's about the balance. So next we have on 18th. On 18th we have purchase of 200 units. So we have again a purchase 200 units we have, and its value is 2.78. So this is the value we have. So the closing would be this value plus this value. So this is the closing value of on 18th. So 20th we have a sale. 20th we have 180 units to be sold. First we can sell this. Balance still we have 50 units to be sold. So 50 we will sell it at 2.78. Okay, and still we have a balance we have to find out. So we'll find out the balance here. So on 20th we can find out the balance. The balance would be this 130 is totally sold. This 200 is out of this 250 has been sold. So 150 would be the balancing number, would be the remaining number. We'll multiply, we'll take it, and this would be the closing stock value. Okay, so 417 is the closing stock value. So we'll try to find out all the values here. So first, as per like what they wanted is closing inventory, cost of sale, gross profit. Okay, that was the three numbers they want. So to get gross profit we need to know sales. So unless we know that, we can't do gross profit, or else we can even put like this. If we know the sales amount and reduce the cost of sales, we'll get the gross profit. So we'll start. So what's the closing inventory? See, this is the closing value of inventory. We have 417. What's the sale? So sales value is add all the sale value individually. So this is a sale value. This is a sale value. This is a sales and sales. This is the cost of sales because these are units and cost of sales. So that comes to 749.4. 749.4. Okay, so how do we find the sales amount? See, each unit is sold for 5 rupees. All we need to get is how many units have been sold. Okay, 20 units, 90 units. So 20 plus 10 is 110. 110 plus 180. is 290. So 290 of units have been sold. We can just get the answer quickly. Okay, we got. So sales minus cost of sales is gross profit. So this is our gross profit. Okay, so that's about the concept here. So if you want to know whether what we have did is like correct or wrong, okay, you can also open, you can also find out through this method, like opening stock plus purchase. Okay, like that you can work out, but I don't think it will, I think it will take a long time for us to find out. So this is the answer. Okay, so now we'll move on to, the weighted average method. So we'll just take it here and we can use it. We don't need to work out everything, we'll just copy everything. Okay, see, the opening stock is going to be the same under weighted average method. The sale, when any sale that is done, it is done only at the previous value, so that also won't change. And we don't need to have the element called as balance. Okay, we don't need to have the element called as balance. So we'll go to the purchase date. So the purchase date is, so we'll start. So the purchase date is 8. On 8 we purchase 140 units and they are worth 2.56. Let's get the amount. So the amount comes to 358.4. $358.4. So what would be the balance? The balance would be this number plus this number. Okay, it would be 560. Now you have to have another column called as weighted average cost per unit. Okay, we should have another column. Why we should have it is, every time we purchase, we have to find out the weighted average. Okay, so 560 is the total value divided by the total number of units. The total number of units here is 100 minus 20, so we have 80 balance. Okay, and plus 140, so we have 220. That comes to 2.545454, like that. So we are going to do a sale. So sale is going to be 90 units. So 90 units, it's like now quite simple. Now you just have to refer to this number, which is the weighted average number, multiply it. So this is what this amount at which it's going to go out. The balance would be this value minus this value. Okay, so we'll try to find out the balance if you want. So balance, I think we can work out easily. I don't think that it would be much of a problem. So we don't need to do a balance, I think. So on 18th we have another purchase. So purchase is 200 units. So 200 units, price is 2.78, and its amount is going to be this number. So the total value would be this value plus this value, right? I think if we do balance, I think we'll get the answer. Let's do it with the balance. Okay, first I think we'll balance it. So how many units we totally have in hand? 100 minus 20, 80. 80 plus 140 is 220. 220 minus 90 is 220 minus 90. That comes to 130. Okay, so 130 units are there. 130 units should be held, okay, at the average price only. So average price is this, and the amount would be this much. Okay, so that is actually the closing balance here. Okay, that is the closing balance. So the closing balance is this number. So we will do another purchase. So the purchase comes to 200 units. Rate is 2.78. Value is this number. So the total would be the earlier 330 plus what we bought now. So it comes to 886. We have to find out the weighted average. Every time we purchase, we have to find out the weighted average. So it's balance amount divided by the units. So totally how many units now we have? So totally we have 330 units. So it comes to 2.67. So this is the rate at which we have to sell. So on 20th, we have 180 units to be sold. The rate would be this rate, and the amount would be 483.7. So as a balance, how many units we'll have? As a balance, earlier we had 130, then 200. Okay, so we have 130 plus 200 and minus 180. So 150 units we have. This 150 units have to be maintained at this value only. Okay, it has to be maintained at this value. So the total value that we still have would be 403. Okay, so 403 is the closing inventory here in this sum. And cost of sales, okay, so every time we sold, so there was some amount that was like coming, right? So we have to add those elements alone. So we had 3 sales, so add all, we get 763. So it is 763. So now we'll know our value. Our gross profit is 687. So we'll find whether what we did is correct. We have the answer here. So FIFO closing inventory value is 417. So that is right. And AVCO closing inventory value is 397. So did we get that? Okay, we got 403. I think that would have been some rounding difference. Okay, that would have been some rounding difference. So let's so if we reduce the rounding, I think we'll get the answer. So let's see. Okay, but I think calculation wise, I think it would not round it off. Okay, it's just showing us rounded. Okay, so I don't think it would I don't think it will round off. So the answer, his answer comes to, the closing value of inventory is 150 units at 2.65. We got 2.68. So let's round off here. We'll put it as 2.54. Okay, our answer comes to 402. It's like reducing a little bit. We'll round off this to 2.68. So that might be some rounding off mistake. So what we'll do, this is a kind of answer here. Okay, and we'll see another question. Okay, so here we have another question. We will use the same format. It asks again FIFO and weighted average. Okay, and we'll work it out. So we'll start. So it's all November. We'll just take the opening numbers. So on 1st November, the company had 300 units. These were valued at 12 each. Okay, and on 10th, we have a first unit being received. We're getting 400 units and the price is 12.5. So we'll work out the balance. So the balance, we'll just add both the numbers. So balance we can't do like that. So it's a purchase. Sorry, it's a purchase. So balance, if we put, I think we don't need to put balance here because we just have to show the difference. Okay, it's already like clearly visible, like there are two differences here. So the balance amount alone we'll put, which would be 3,600 and 5,000. Okay, so next is going to be on 14th there is a sale, and sale is going to be 500 units. So if it's going to be 500 units, the problem is going to be, it's going to be two sales, right? So the first one has to be this, and the balance 200 units would be from this. So now we have to adjust and find out our balance. Okay, the balance on 14th is, we still have, after the sale, still we have 200 units. See, this 300 is gone. 200 minus 200, we have like this as the balance. So our balance value would be this number. Okay, 2,500. So let's go to the next one. Next is on 20, we have another purchase, and the purchase seems to be another 400 units, but at 14. So our total inventory value now would be 2,500 plus 5,600. On 21, we have sold 500 units. Okay, but we can't sell it as a single 500. We have to sell it as in two ways. First, we have to sell this 200 units, and then we have to sell 300 units. So the balance after we sell this 500, see this, now this 200 is gone. Okay, out of this 400 we have only 100 left, so we just need to get the 100 left, and this is sold at a price of, okay, and the balance we have is this number. So again, this is our balance. So again we have 25. So 25 is again a purchase, and the value of it is 15 now, and our closing value would be the existing stock plus the purchase value 7,400. And as the last entry we have another sale. So sale is just for 100 units. Sale is just for 100 units. So FIFO, as per FIFO, this is what would be sold first, and the balance inventory would be 7,400 minus 1,400. So, or else we could also put it like this. We can just take it as balance. Okay, so this out of the balance, the first one is gone, purchase alone is there, so still we have 400 units worth 6,000 worth of stock. So the closing inventory is 6,000. Okay, and the cost of sales, add all the individual cost of sale value, so you got 14,200. And at what price are they sold? Without that we can't find out the value, so that is not given here. So without that we can't find out the GP as well as the sale. Okay, if you want we could take some number. So the total sales units have been 1,100 units. So we'll assume that a selling price of 20, we'll just assume it. So if you assume like that, we will have 20 rupees in 20 rupees into, if you put this, we will get the, okay, so our GP would be 7,800. Okay, so that's about this problem. So if we do this for average, okay, there is an answer here. So let's see the answer. So closing inventory 6,000 and cost of sales is 14,200. So is it right? Yes, it's correct. And for average method, so as per FIFO method, the profit would be 20, sorry, 7,800. I think that's also we got. So we'll work out for the weighted average method. We'll work out for that. Okay, so every time we purchase we have to rebalance, right? We have to rebalance, so we will do that. Okay, so totally we have how many units? We have 700 units, and totally we have 8,600 worth of assets. Okay, and what is our cost per unit? Our cost per unit is this number divided by divided by units number. So we got this. So we don't need to have separately the weighted average cost value there. Okay. So we got it. So anytime we are going to sell, we don't have to bother much. So we'll take the problem here. So on 14th, how much sale do we have? On 14th, we have 500 units being sold. So 500 units could be worked out on 12.28. So 6140 is gone. Okay. So balance, how much we have? So balance is, I think we'll work out the balance. We don't need to confuse. So 700 was there, 500 sold, 200 is the balance, and the balance have to be in the same value only. So the balance value is 2456. Okay. Again, there's going to be a purchase. The purchase is for 400 units at 14, and this is the cost. So every time it comes, we have to balance. Okay. So hope we got the number. So 200 units plus the old balance plus purchase. Okay. So total value that we got is this. We added both these numbers here. Both the numbers have been added. So, and that has been divided. So we got our balance number. So now we have a sale. So sale again we have for 500 units. So 500 units of sale should work out only in 13.42. So this has been sold. So again we have to a balance. Balance that we have is 100 units at 13.42. This is the balance now. So again on 25 we purchase 400 units, which is 15, and this number. So we have to again balance it. So we'll take here. So we already have 100. Now we bought 400. So totally there is 500 in stock. And both the value here, both these value comes to 7342. So it is 7342. And what is the rebalanced value? This number divided by units. So 14.68 is the balanced number. And now finally we are selling 100 units. We have to sell it at this value only. $14.68. So that is what is sold. And finally the balance would be 400 units at this price, and this is our closing stock. So our closing stock value will be 5872. Our sales value would be the same, that won't change. Our cost of sales value is, add all the sales numbers individually. So this is a sale, this is a sale, this is one more sale. So it comes to 4772. Sorry, it comes to 14318. Okay, so our profit is 7682. Let's see the answer here. Answer is 74, we got 82. I think that should have been some rounding of difference, but still we'll check. The cost of sales as per their calculation is 14,326. We got 318, and the closing value of goods as per average method. What is the price? The price, I think they have not calculated in that manner. They have used some other different manner. So either way, we got like a similar answer here. So that's about the problems. So that's about the problem here. We have done both FIFO and weighted average. So ensure that you are doing the balancing properly. If you're not doing the balancing properly, you won't get the answer. So ensure that alone you are doing it perfectly. So we have two theory questions. We'll answer that. In times of rising prices, the value of inventory using FIFO method as opposed to weighted average cost method will result in which one of the following combination. Okay, so he's asking what would be the impact in cost of sales, profit, and closing inventory. Okay, so we'll put it like this. Assume a company has like they are having 3 units. Okay, unit 1, 2, and 3. Okay, each time they buy these units, first unit, second unit, and third unit, and finally they sell. So this is the purchase, this is the purchase of it, and the sale of it is just 1 unit. Okay, at 1 unit, these are bought at different times, and the price seems to be like this. Price is inflated, he says, so price should be like 1, 2, and 3, right? So the total value of inventory, okay, the value of inventory would be 1 here, 2 here, and 3 here, and totally it would be 6. Okay, the total value of inventory is 6. Now if you are going to use FIFO, let's see what happens. If you are going to use FIFO, what happens is this 1 unit, okay, would be sold. The first in would be the first out, so the 1 rupee value of item would be sold. Okay, so what would be the cost of sales? The cost of sales would be 1, and assuming that your selling price, okay, your selling price seems to be like 5 rupees. Okay, so your cost of sales have been 1 rupee, so your GP would be 4 rupee. So this is for FIFO. Let's do the same kind of stuff for average method. Okay, for the average method, so let's see how it works. See, in average method everything is same except for the price of inventory. Okay, inventory would be priced not at 6 but at the average price. So the average price would be 6 divided by 3, which is 2. So if you're going to sell, the item that would first go is 1 unit into 2 rupees, and 2 rupees would be your cost of sales. So your sales amount is 5, your cost of sales would be now 2, and your gross profit would be 3. So what is the answer? The answer would be, he says, in times of rising prices, the valuation of inventory using FIFO as opposed to weighted average, okay, will result. If you are using FIFO, okay, rather than using weighted average, what would happen? If you use FIFO, okay, what would happen to your cost of sales? Your cost of sales would get reduced. It's lower. Okay, so lower. So answer is going to be A or B. Next, what would happen to your profit? Your profit seems to be higher. Okay, when compared to this method is higher. And what happens to your closing inventory? So closing inventory, we have to find out. See, closing inventory here, closing stock. See, closing stock here, the balance closing stocks are 1 value item is gone, so 2 and 3 are there, so this value would be 5. Here the closing stock would be each has a value of 2, okay, and there are only 2 units, so that will be 4. So when compared to this method has a higher inventory. So the answer is A. Okay, hope you got the idea here. So try to do this in a very quick manner, because in exams sometimes when they ask this question, it's not always that it would be uh, inflationary manner. It could also be in deflationary or reducing price manner, and also they could ask weighted average method, this method opposing this method. Okay, assuming the company is using this method instead of using this, what would be the effect? So they can ask in any manner, they can ask. So work out it perfectly and get the answer. So the next one is, in preparing its financial statements for the year, a company's closing inventory was understated by 3 lakhs. Okay, so the inventory value is shown lower by 3 lakhs. What will be the effect of this error in the SOPL if it remains uncorrected? So the closing stock is lower. So the closing stock is lower, and what happens if it's uncorrected? The current year's profit will be overstated. Is it right? So let's see what happens in the concept here. See, sales. Okay. See, closing stock is something like similar to sales, right? It's something like similar to sales. That's how it is being treated in SOPL. So if you are like showing lower closing stock, okay, if you show lower closing stock, your current year's profit will be lower. So let's see, current year profit will be overstated. No. Current year profit will be understated. Yes. So C and B and C are the answer. And what would happen in the next year? In the next year, okay, this year it has been understated. So next year it would be overstated. Okay, so next year's profit will be overstated. So the answer is C. So let's see the answer. So the answer is C. Okay, so in order to do this, open a account. Okay, open a trading account. If you know how to open a trading account, do that, or do a SOPL and see how it works. Okay, so it takes a longer time to explain, but you guys can try this sum. So hope you have understood inventory valuation. So we started with cost or NRV methods, then we found out this FIFO and weighted average method. So always try to balance and get the answer so that it's like quicker. So that's about the concept here. Thank you very much for watching this video. We'll end this video.